You know your plan. You've studied the setups. You understand position sizing. You know exactly what to do. And then the market opens. Price is moving. Your money is at risk. And suddenly everything you know disappears. You break your rules. You chase, you size up. You hold too long. And after the trade closes, you sit there thinking, what the hell just happened? I knew better. So why didn't I do better? That's the discipline gap. The space between what you know and what you actually do when it matters. And here's the truth. Most traders don't want to hear. It's not a knowledge problem. It's not a strategy problem. It's a psychological problem. You don't need more education. You need better emotional infrastructure. Because when emotions activate, your prefrontal cortex, the part of your brain that thinks rationally, goes offline. And your limbic system, the part that reacts to threat and opportunity, takes over. That's not a character flaw. That's neuroscience, and it happens to every trader. The question isn't whether it happens. The question is what you do about it. Most traders think the solution is willpower. Just be more disciplined. Just control yourself. And that approach fails every time. Because willpower is finite. You have some in the morning. By midday, it's depleted. By the time the market throws you 3 losers in a row, you've got nothing left. Willpower works until it doesn't. And in trading, one bad decision under emotional pressure can wipe out weeks of execution. You can't rely on willpower. You need structure. Here's what structure looks like. You don't try to control your emotions. You control what you do with them. You feel FOMO. That's fine. You don't take the trade unless it's in your plan. You feel frustrated after a loss. Normal. You don't immediately jump into the next trade to make it back. You feel overconfident after 3 wins. Expected. You don't double your position size. The emotion shows up. You notice it. You don't act on it. That's discipline. Not suppressing the feeling. Managing the behavior. And the way you manage behavior is through pre-commitment. You decide before the market opens what you're allowed to do. You set rules that activate automatically when emotions spike. Daily loss limit. Max trades per session. No trades outside your setups. These aren't suggestions. They're circuit breakers. When emotion tries to override your logic, the rule steps in. You're not making a decision in the moment. You already made it. You're just following the system. That's how professionals trade. Not because they're emotionless, because they've built systems that don't require emotion management in the moment. Let's be clear about what emotional discipline is not. It's not becoming a robot. It's not pretending you don't feel anything. It's not suppressing fear or excitement. That's emotional repression, and it doesn't work. You feel everything. You're human. The market triggers you. Losses sting. Wins feel good. Missed opportunities frustrate you. All of that is normal. Emotional discipline means you feel the emotion, you recognize it, and you follow your plan anyway. The emotion doesn't dictate the action. The plan does. And here's why this matters so much. Your edge isn't just in your strategy. It's in your ability to execute your strategy consistently. You can have a 60% win rate strategy. But if you only follow it 50% of the time, you don't have a 60% edge. You have chaos. Consistency is the edge. And consistency requires emotional management. Not perfect control. Just enough structure to keep you from sabotaging yourself when your brain is screaming at you to do something stupid. The discipline gap exists because trading is one of the only professions where being smart works against you. You see the market moving. You recognize a pattern. You think, I should take this, and your intelligence convinces you to override your plan. That's your brain doing what it's designed to do. Recognize opportunity and act. The problem is your brain doesn't distinguish between real opportunity and emotional reaction. It just sees movement and says go. That's why smart traders make dumb decisions. Not because they're incapable, because they're human. So what do you do about it? You stop expecting yourself to be perfect under pressure. You stop relying on willpower. You build systems that work when you're emotional. You create rules that activate when logic fails. You accept that emotions are part of trading, and you design your process around that reality. You don't fight your psychology. You work with it. And over time, the gap closes. Not because you stopped feeling, because you stopped letting feelings make your decisions. The discipline gap is normal. It's expected. And it's solvable, not through more knowledge, through better structure. You already know what to do. Now build the system that lets you do it.